Actually, do you know what? One of the common things that is always asked to all panelists, almost across every single session, regardless if it's about some sort of banking and finance standards, or whether it's about crypto, or whether it's about payments, everyone seems to be asked the same question. What do you think of the current market conditions, and how do you survive it? And what's interesting is all of them are coming back with similar sorts of vibes, and that is...
Welcome to the Exponential Investor podcast. Want to be a better, smarter, more clued up investor? Well, you've come to the right place. We cover the breakthrough investment ideas you don't hear about in the mainstream to keep you on top of the megatrends and opportunities reshaping our world.
Good morning and welcome to another episode of the Exponential Investor podcast. My name is Sam Volkring. I'm your editor, and as you can see, I am on my own, going solo this week for the podcast. That's because I'm actually on location here in, it's a little grey and gloomy, Amsterdam for the Money 2020 conference or week. It's a big fintech, banking, finance, future of money, crypto, blockchain, anything to do with banking and finance and the global economy or money in any sense of the matter. It's here this week. So we're talking about payments, remittance, as they say, crypto, blockchain, VC investments, lots and lots of different stuff. There's speakers from companies like Stripe, John Collison, the CEO and founder of Stripe, the blockchain.com, Visa, all the big companies, like all the big banks like Citi, JP Morgan, all have exhibitions and speakers, loads and loads of content all week. So instead of the regular video with myself and Shay, usually at our home offices, I am here at Money 2020 in Amsterdam. And today, one of the interesting things that was spoken about, actually, do you know what? One of the common things that is always asked to all panelists, almost across every single session, regardless if it's about some sort of banking and finance standards, or whether it's about crypto, or whether it's about payments, everyone seems to be asked the same question. What do you think of the current market conditions, and how do you survive it? And what's interesting is all of them are coming back with similar sorts of vibes. And that is that it's not that they're not worried about the current situation. It's just that they realize that the companies that are smart about it and can get through the next sort of 18 months, they're saying, sort of 12 to 18 months, are the companies that are going to come out the other end stronger, more robust, and better for it. Whereas those that are not prepared, those, and the term was thrown around in a session yesterday about fat babies, that a lot of companies became fat babies. They were fed too much too soon, and now they need to shed some of that baby fat. What they were getting at is that a lot of money was thrown into a lot of companies, that VCs and institutional money made a lot of unicorns. So that's a company worth $1 billion or more. And so they weren't necessarily actual unicorn companies, but they were made unicorns just because of the money that was getting thrown around and some of the valuations. But the clear point is that those companies now that can operate leaner, that they can make the hard decisions about extending their runway by trimming some of that fat, those are the companies that are going to survive and come out the other end better for it. So, reducing headcount, instead of having 1,000 employees, maybe they have 500. Instead of, extra cash burn on marketing, they rein that back in, and they push out those runways of cash burn from, maybe 6 to 10 months to a year to 18 months instead. And then the other point that was quite clear and in abundance was that there is a lot of capital still waiting now to find a home. One of the descriptions that was put forward was that over the last sort of 10 years, a lot of money has come into the market, a lot of institutional money has come into the market, and what it does is it grows and it grows and it grows and it grows and it grows, and then it sort of starts to tail off. And instead of sort of slowly tailing down and tapering away, it just drops off a cliff, and the tap gets turned off. And that's really where we are now. And when that tap gets turned off, it's not that the money doesn't exist anymore. It's just that it's parked, and it doesn't want to find a home, and it's not going to find a home until things have settled down. And a lot of these companies either burn themselves out of existence, or they do the hard things, and they make a company valuable enough and worth enough and run well enough in order to survive. And that's when that capital then starts to get redeployed. So the kind of, I suppose, the kind of air about the current market conditions that are coming, and I say these are coming from CEOs, from founders, from people running some of the most important companies in the world, some of the biggest companies in the world, is that it's not necessarily a time for panic and fear, albeit that there's a lot of that in the market. But this is where building happens. This is where innovation happens. This is where companies that are able to weather the storm really knuckle down and build great long-term companies. And so a lot of the VCs are saying, look, while we're not investing in the way we used to, we are still finding great companies and opportunities, and often at discounts, often at great bargains, really. And I think that's the attitude that you need to take in this market right now, is that you've just got to be a little bit more stringent about how you look at the companies you want to invest in and the opportunities you're investing in. Take a look at, are they cash flow positive? Is there a profit either on the doorstep or very close to the doorstep? Do they have a runway? Is their cash burn sufficient enough? Do they have enough cash in the kitty to ensure that they could continue to be a loss-making business for another 2 years? If they can, and they can continue to double down on investment in the business and the idea that they have, or the problem that they solve, or the utility that they bring, those are the sorts of companies that you want to start to consider with greater detail. And then sort of beyond that, that's where you get the growth, and the growth will come back. And that we've gone through these market cycles before. And it's interesting when on one of the panels about where is the money going, so where is the money coming from and where is it going to at the moment, which is where a lot of this came from. They sort of wrapped up the panel and asked, these people, we were talking about people from Primary Bid, from Citi, a VC crypto fund. They asked them in one word, what would you say to any business leader or founder about how to, what's the one word that best describes how to move forward and to manage this current period if you're a business leader? And they all had different responses, but they all said things like empathy, commitment, discipline. These are the sort of core fundamental values and traits that you need to have as an investor as well when you're trying to weather a tumultuous market and economies that are heading towards recessionary periods. You've got to stay disciplined. You've got to have a bit of empathy with the people around you, other investors, and the companies about how they're being run. And if you're a manager or you're a business leader, have some empathy of the people that you're working with, or the people that I'm talking to, talk to you. I understand what it's like to try and invest and operate in a market like this. And it's not fun. And that's why we have these videos to try and talk to you, and they help you understand that it always feels worse than it actually can be, and that these periods don't last forever, and that you can weather the storm by being disciplined, by executing your plan and strategy well. Again, a lot of the panelists, a lot of the leaders of industry, they talk about having a dream, having a big goal, but always making sure you plan in the right way to achieve that by taking the appropriate, educated, calculated risks along the way, which is another theme that you should take forward as an investor. But overall, even though, and I've been to a lot of these conferences over time, through good periods and bad, with crypto companies were the dirty word not that long ago, and now everyone's talking about it from an investment point of view, integrating it into payment networks. The banks are all looking at it, or at least the forward-thinking banks are looking at it and working with a lot of companies in this sector. So that's one of the other things as well, right? Is that no longer is crypto and blockchain looked and frowned upon by traditional finance in the way it used to be. Granted, we're still really, really early on in that, and a lot of the big banks and are still looking at things like DeFi. Like one of the guys from Citi was talking about where they're looking for investment opportunities, and he said, "Look, yeah, we're looking at DeFi, decentralized finance." So there's a lot of talk around that as well, and so there's some real opportunities out there too. And I think the point I want to make is that there are a lot of opportunities in this market if you stay disciplined, do your due diligence well, run through everything that you would normally do, but then do it again and really be stricter and disciplined with how you go about filtering and selecting your investments. But as I say, we're talking about a lot of global leaders in banking and finance that have been presenting and talking and meeting this week. And they all have that commonality around it's tough, it's hard, it's not going to get better right away, but these periods don't last forever. This isn't a new normal. There are some things that you should probably get used to, like higher interest rates, but that's because cheap money was the abnormality. And we've said this to you before as well, is that when interest rates are at 0 or 0.1%, and the retail rate that you pay on your mortgage or whatever is at about 1.5%, that's abnormal. That's not a normal economy. And so you should start to look forward to getting to higher rates on mortgages. And maybe we even get back to interest rates at the bank where you can actually earn a couple of percent. But inflation's not going to go away in a hurry. This sort of period where we're moving towards a recession is probably going to last at least another year, a year and a half. And it's going to be difficult to invest, and it's going to be difficult to operate businesses in this market. But if you double down on the idea, the innovation, the development, trim the fat, get rid of those fat babies, make them lean and sleek, and weather the storm. And there are a lot of opportunities in this market that at the other end of this will go on to become amazing, incredible companies and opportunities. Crisis comes opportunity. And we've said that to you before, but that's, I think, the key takeaway from today. Thanks for watching. I'm about to head off back to the conference and absorb loads more. Shay will be back with you with the Exponential Investor podcast next week. And I'm taking a couple of weeks off, so I'll be back with you again soon. But thanks very much for watching, and I'll be with you again soon. Bye for now.